Today in this video, I'll talk about the latest development in U.S. China trade war, where China has instructed its domestic airlines to freeze incoming Boeing aircraft deliveries, and my usual portfolio update for day 41. Hey everyone, welcome back to the channel Million Dollar SIP. Today is day 41 of my journey to $1 million by investing in TQQQ using hybrid SIP strategy. So I started my day with the same routine of checking where the opening price and closing price of the previous day's candle is in order to determine my daily investment limit. So as you can see here, my opening price is about 12 EMA, but the closing price is below the 12 EMA, which means TQQQ is still in downtrend. And so my daily investment limit also continues to be 200 to $250. Then I switched to the 5 minutes time frame. TQQQ opened above the 12 EMA, so I waited for my usual setup, which is the dip below and then bounce back above. So as you can see here, the dip happened around 9:15 Central Time and the bounce back around 9:40 here. So at this point, the price was around $50. So I decided on 4 units in order to fit into my investment limit of $200 to $250. So I bought 4 units at 50.605, investing $202. So before I proceed further with TQQQ, let me discuss today's breaking news, which is China ordering its state owned airlines to suspend deliveries of Boeing aircraft and halt purchases of US made aviation parts, marking a significant escalation in the ongoing trade tensions between US and China. The decision comes shortly after the United States imposed 145% tariffs on a wide range of Chinese goods. In retaliation, China responded with 125% tariffs on American exports, deepening the economic standoff between the world's two largest economies. So, what exactly did China do? The Chinese government's latest move targets Boeing, a cornerstone of the US aerospace industry, with immediate effect. Major Chinese airlines, including Air China, China Eastern, and China Southern, have been instructed to freeze incoming Boeing aircraft deliveries. These three carriers were collectively slated to receive nearly 180 aircraft from Boeing between 2025 and 2027. So, alongside the suspension, Beijing has also restricted the import of US manufactured aircraft parts, raising maintenance and operational costs for Chinese airlines that currently operate Boeing jets. So, in anticipation of the financial impact on its domestic carriers, China is reportedly exploring subsidy options to ease the transition while simultaneously considering expanded cooperation with Airbus and other non US manufacturers. So, this move follows years of cool relations between Boeing and China, dating back to earlier rounds of trade disputes that began in 2018. So, while orders have already declined since then, the current directive signals a more systemic shift away from Boeing in China's long term aviation strategy. So, how does this impact on Boeing? So, this presents both short and long term risks for Boeing. Although the company may redirect some aircraft to other global markets in the near term, China has historically been a vital customer, accounting for up to 25% of Boeing's deliveries in 2018. And the current projections estimate that China will account for for 20% of global aircraft demand over the next 2 decades, underscoring the strategic importance of the market. And with the immediate aftermath of the announcement, Boeing stock declined 3% in pre market trading, reflecting investor concerns over potential revenue losses. So, as of April 2025, Boeing had delivered 18 aircraft to Chinese airlines this year, deliveries that may now be rerouted or delayed. Industry analysts note that while Airbus cannot fully compensate for Boeing's absence due to capacity constraints, Boeing risks permanent market share loss if the rift continues. The broader concern is that ongoing diplomatic and regulatory hurdles could limit Boeing's access to a key region for future growth. And of course, there are broader economic implications with this. Boeing supports tens of thousands of jobs, particularly in states like Washington and South Carolina. So, a sustained halt in Chinese operations could trigger layoffs, project delays, and reduce spending in related sectors such as manufacturing and aerospace engineering. The US economy, valued for its resilience, may absorb some of the impact via trade realignments with nations like Mexico, Vietnam, and others. However, a prolonged trade conflict could drive up costs for businesses, aggravate supply chain disruptions, and intensify concerns about global economic slowdown. And the recent movements in bond markets and a sliding dollar have already signaled growing investor caution. China's decision appears to be a calculated blend of economic retaliation and industrial strategy. So, by curbing dependence on Boeing and strengthening ties with alternative suppliers, Beijing may be seeking to insulate its aviation sector from future geopolitical shocks. For the US, the high tariffs are part of a broader effort to protect domestic industries and address long standing trade imbalances. However, critics warn that such measures could backfire if major US exporters like Boeing become collateral damage. And Boeing itself faces added pressure not only from geopolitical shifts but also from internal issues, including production quality concerns and regulatory scrutiny. These challenges could limit its ability to respond to market disruptions effectively. So, what lies ahead for US and China after this? The Boeing suspension underscores the high stakes in the US China trade conflict. Both governments have signaled interest in negotiations, but no concrete talks have been announced as of April 15th. The aviation sector, and by extension global markets, will be watching closely for signs of de escalation or further retaliation. So, until then, Boeing, US suppliers, and investors remain in a holding pattern, waiting to see whether diplomacy or deeper economic confrontation will shape the future of US China relations. Now, getting back to TQQQ, today at the end of the market, TQQQ closed at 49.81, up by 0.38%. So there's no much change today. S&P 500 was down 0.17%. Nasdaq 100 up 0.18%. And Dow Jones was down 155 points. This is amidst ongoing trade war. There are a lot of uncertainties. So market is indecisive right now. So now coming to my portfolio update as on day 41. So my total investment till date is 89.96 with 148 units in my holdings. And today, TQQQ closed at 49.79, which means the market value of my holdings is $73.69. And my average price per unit is 60.78, down from $90. So I'm still sitting on a net loss of $16.27, translating to a 18% decline. And since I started, TQQQ is down 45%, but my portfolio only down 18%, which means I've outperformed by 27% thanks to my hybrid SIP strategy. If you enjoyed my video today, please like and subscribe to follow my journey. That's all for today. Thank you. See you tomorrow.